Dollar World Reserve Currency Status by www.forexconspiracyreport.com. As the U.S. Congress passes an increase in the debt ceiling without a crisis, the dollar world reserve currency status is not being mentioned. On the other hand, when Tea Party activists shut down the U.S. government and nearly made it impossible for the USA to pay its bills, the dollar world reserve currency status was imperiled. Why should anyone interested in Forex currency rates be concerned about the dollar world reserve currency status? Here are a few thoughts on the subject, including suggestions for trading in the future. Dollar world reserve currency status. The status of being the world reserve currency has not always been held by the U.S. dollar. When Spain ruled much of the Western Hemisphere and brought shiploads of gold and silver back home, the Spanish dollar, the piece of 8, dominated all other currencies. This was from the 17th to early 19th centuries. Currencies used to be equal to a given amount of gold. Thus, the reserve currency was gold. As the British Empire rose to its heights in the 19th century, until 1944, the British pound sterling was considered the world reserve currency. Then the Second World War devastated Europe and much of Asia. The remaining global economic power was the United States. At the end of World War II, the dollar was pegged at $32 to an ounce of gold, and all currencies were likewise pegged to the U.S. dollar. In the aftermath of World War II, U.S. aid and trade dominated the non-communist world. When countries traded with the USA and made a profit, they simply kept the dollars they received as currency reserves. This was the beginning of the dollar reserve currency status. Even when the USA went off the gold standard in 1971, the dollar remained the preferred reserve currency of nations around the world. The USA was simply the dominant global economic power, and the faith and trust in the U.S. government to pay its bills went unquestioned. What a little Tea Party and debt can do. The dollar reserve currency status has eroded over the years. A large part of this is because of the ever-mounting U.S. debt. But a shock to the Forex trading world occurred this last fall, when it occurred to people around the world that the United States government might actually renege on its sovereign debts. What happened was that a conservative wing of the Republican Party blocked action in the U.S. House of Representatives to extend the U.S. debt ceiling. Without the authority to issue bonds, the U.S. Treasury would have been unable to pay interest on or return principal on U.S. Treasury bills. This was a shock to Forex traders as it brought into question the dollar world reserve currency status. Why would a nation want to hold U.S. dollars in reserve if the value was constantly falling and it might not be possible to collect on U.S. debt? To the extent that nations are concerned about a possible demise of the U.S. dollar as a reserve currency, or to which they might believe that there might be replacements such as the yen, euro, or Chinese yuan, nations might start to sell dollars and rid themselves of U.S. Treasury debt. To the extent that this happens, it will be wise to short the U.S. dollar in trading. However, suggestions that the yuan especially will overtake the dollar are premature. Our belief is that a more likely scenario will be a real estate and manufacturing crisis in China and a downward pricing of the yuan against the major currencies. To the extent that movement of the dollar both up and down are possibilities, Forex options are typically a wise choice. For more insights and useful information regarding trading foreign currencies, visit www.forexconspiracyreport.com.